The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Actually, tomorrow I will not be here. So let's treat today as if it's Technical Friday. Give me your questions based on the Chapman Wave methodology. If you have them, let's run the numbers. The S&P E-mini is up 22 right now, 27.18. What does that do? It gets it within 75 cents of making not a B, but a new leg C to the upside. The gray B changes to a blue C, which is very important because it's a buy mode, which suggests that we should be going to at least a D. Pattern that I talk about is that the template that I'm using is the arch formation that goes from a lowercase h to a lowercase m. And you can see that in the weekly chart. I drew it right there. The 120-minute chart just broke to a leg E. This move up right now is really quite a surprise to me because I anticipated that there should be some kind of a pullback. We had some spectacular days. Just look at this. I'm going to go to the Dow right now, INDU. You've had, since the low that was made in the reversal on Friday, where we would hit 23,531, we're over 1,300, over 1,200 points from that low in just 1, 2, 3, 4, 5 sessions. In fact, only green candles, and I thought, gee, 5 green candles. You should have a 6th candle today, which is a little bit red. And I'm not complaining. We've been long the Dow since last Friday. Had different positions, took some nice gains, took a little bit of a loss on a position I just didn't want to take any risk on, but we got right back in. So we're along the Dow. It looks really nice. In fact, the way it's acting right now, 24,747, that's the old 747, huh? We'll look at Boeing in a little while. It is about to tackle that whole cluster formation that took it to peak B on April the 17th at 24,858. So this is very nice action. And total disbelief. That's one of the reasons why I was determined to have us only on the positive side, only on the long side in this particular phase. Now, there's something that's going on here. The Dow support now is at 24. It's already basically at the low of the day, or let's call it yesterday's high, which was 24,586. That is now key support on the short term. But this is fabulous action. Why? Because it's starting to help the weekly chart, which desperately needed help in the Dow. It's still not very good, but it's at least better than it was. Let me get rid of this. I don't need any more of the 120-minute charts. Let's move that away. What is really important is that this is the 10th of May. So we've got, 2.5, 3 weeks to go. There's a long time to go, and yet we are nicely above the 9-period moving average. It looks like we might tackle the high of last month because this doji candle, long-legged doji candle, as my subscribers know, to my opening call, I discussed it in quite detail. And I said, we got to watch this closely because a close below 23,344 would be very negative. A close above 24,858, which was the high of last month. Let me double check that. Yes, 858 would suggest that there could be some more to go on the upside. That would be very good action. And it helps the MACD remain positive. Stochastics at 70%. I'm not sure. It's going to take at least another 300 points or more to get that stochastic to get back to 80%. So that's a little bit of a worry. Okay, let's get to the nitty-gritties here. We've got the S&P cash up to 23.78 at 27.21. It has started its leg C. This is a big positive. This is leg C in the daily chart. Now I can put an up arrow, which implies that there should be a D. Doesn't have to, but the rule of Chapman methodology says that when the MACD is improving a lot, stochastic's improving a lot, and you're well above the 9-period moving average, and you've passed leg B, peak B, the doji high, even if you haven't closed above it, it is a bullish activity. Okay, so the S&P has the next level of resistance is in the 27 to 27.32 area, and key support now is at 27.09, somewhere around there. Let's go to the QQQ, because this to me is really quite important. It broke a resistance line, a dash resistance line. It's in leg E. I don't know if this is going to be a recycle, instant restart. It's in leg E. The MACD is good. Stochastic is at 93%, really good. And the weekly chart is improved because it is about to tackle the big gap. It was a Monday pullback back on the 23rd, week of the 23rd of March with a high of 169.22. And the previous week, the low was 170.90. And we're trading 169.45. We're into the gap. That is really big. Oh, man, look at that. Yep, we're into that gap. So that is the gap of the 19th of March. Oh, you remember that? That started off that huge sell-off. That was the island reversal. So this is very important. Another reason why I want you to remain on the long side of the market. And in fact, the thing that's helping the most, I believe, is the SMHs, and they're up 0.93%. The Dow's at 0.90, the S&P's at 0.89, and that is really helping. You need to have the semiconductors participate because they've led the market on the way up. They've led the market on the way down for quite some time. But most importantly, what we're looking at is that the MACD is good. The stochastic's at 80% finally. And you've got the chance here. It could make a head and shoulders pattern in the weekly chart. But what's really important is that the monthly chart was saved by the last 3 days' activity. Why? Because it pushed way above the 9-period moving average of 99.30. The MACD just managed to so far deflect higher without crossing negative. Stochastics at 76%. So SMHs, very, very important. You've got Intel right now. Intel is acting quite well. It's up 0.09, not great. But what's really important is that Applied Materials are acting pretty well. It's up 87 cents at 55. We've got LRCX, Lam Research. Lam is up $2.33. Not bad action, just above a downtrend resistance line. But this is the big kicker. NVIDIA. NVIDIA is trading at 258.24, up 2.46 with earnings tonight. Now, it's a D in the weekly chart, a D in the monthly chart. It's a C. I can't really call it anything else but a leg C in the daily. Oh, well, I can. So that could be a series of higher highs. Oh, I'm going to make this an alternate count, D/C. Everything about it says this should be C, that you've got earnings this afternoon. The support is at 250. If there is really good earnings, and that's I just don't know how to assess that, but if the earnings come out and they're really good, I would say that the 263 to 265 area will be the big test of whether the semiconductors can really continue to retrace to all-time back to all-time highs, or whether we're looking at some type of action approach.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, since I won't be here tomorrow, let's just do this Technical Friday. It's Thursday, of course. In the 2-minute chart of the E-mini, I've got a peak E with a little doji top right here with a high of 26. Did I say 26? No, 20. We've passed that a long time ago. 27.21 round number. I think there'll be a little bit of a breather here. It's also leg D in the 5-minute chart, and it's in the 10-minute chart. It is a leg D. So remember, this is the same as the 2-minute chart. It's like a daily. 5-minute, I'm treating as if it was a. So 2 minutes is like the 120-minute chart. 5-minute is like the daily. And the 10-minute actually probably should be about a 15-minute is the weekly chart, or whatever you want, daily, weekly, monthly, or 120-minute, daily, weekly, doesn't matter. These are time frames extending. So we'll see. And it'll be definitely a peak E sell signal in that 2-minute chart if this goes below 2.6, close below 2.61750, and if it goes to 2.761550, that's a sell mode, almost certainly. No, I shouldn't say certainly, a good chance. At least 2-minute chart. That means that the daily chart, no. That means that the 5-minute chart, remember I'm trying to look at overlapping time frames, needs to close under 2717 to even think of getting a sell signal. But it has to close, they probably close at least two 5-minute bars out of 3 to give a sell signal. And that could turn into a sell mode. I'm not sure. There's still tremendous strength that I'm looking at. Total disbelief in this rally. I was a disbeliever this morning, even though we are long, and I wanted it to go higher because I thought, uh-oh, that's going to be a real problem. Now, in the SMHs, yesterday during my show, I had an email from Al. I was going to mention, I didn't have a chance because I had a couple of questions. What happened was he got, I'm almost sure it was Friday that he sent a text, or no, an email saying, went along the SMHs at 97. It was somewhere around 97. And then yesterday he said, and his target was the 102 area. He got out yesterday at 102. And I was going to say to him, bravo, we are long. We are staying long for now because I still see residual strength. And we'll see just where it goes. So we've been long since the opening Friday morning. There was an opening pop and a dip. We got the dip, the low of the day. We are long the 300%. We have a position in 300% long SMHs. That's the SOXL, and that was at 100 and just under 140, and it's trading at 155.25 right now. We did take profits this morning in a little bit of a position because it seemed like the prudent money management thing. So we got out at 153, the round number opening, and the rest is running higher. And that's kind of the way I wanted it, and we've raised the stop on that. Now, what's really interesting is NVIDIA has been a big help to the SMHs. So this is going to be a big issue tomorrow, and I don't really think that we need to be risking all, I don't want to have a big risk after such a big gain, but we had to have money management taking something off. But the technicals are really improving. It's almost got a Chapman wave squash pattern. So if there's anything remotely resembling a positive interpretation by the market, I don't care what NVIDIA says, but if the interpretation is bullish overnight into tomorrow morning, give it an hour into the opening tomorrow morning, that'll be a big help all around to the SMHs, to that's the semiconductors, to the QQQs, to the XLK, that's the tech sector ETF and the S&P, and the QQQ, of course. So this is important. Why? Because we're getting to some resistance. And my target was the 104s in the SMHs, and here we are, high of 104.49. Just about there right now. We're at 104, 147. Now, there are a couple of other things I was asked about. So, Technical Friday, let's get to a whole bunch of things. The XLF, which I've kind of ignored, I'm sorry to my my subscribers. I really meant actually to go long yesterday, something in the XLF, but instead what we did is we bought a low price financial, very low price, single digits, a financial at $3.38, and it had a fabulous day yesterday, up 4-something%. Today you had an even better day earlier on. It hit $3 and, let me just check here, $3.62. That's like a 9% a gain in 2 days. So that's the only way I felt that I wanted to deal at this particular point with the XLF, although now I can answer a question. And that particular instrument that we have is now at 359. So it's still doing very nicely. So the question is, here, as I'm sure I'm one of many eagerly wanting to know your opinion, do you continue to see an H pattern coming over the next weeks, and most likely testing somewhere in the 23,000s in the Dow again? Also, is there a pattern you're watching where you count the number of H patterns aftershocks, I call them aftershocks, on the weekly before going all in bull mode again? So this is a really good question, because it deals with what a lot of what I've been talking about for ages. And let me just show you what I'm looking at. Look, even here, there's an H pattern that's going to another H pattern like the lowercase m. However, what's really important about this is so for a single leg A from a new low in the XLF. 26.55 was the low of the 9th, the beginning of April. Then it bounced and it came back. XLF made it high, all-time high of 29.81. back on the 12th of March. So that 3-point decline is at 11%. Then it made a lower low to 26.46 on the 3rd of May. And that's last week. And now it's just gone straight up. Am I missing the boat? Do I need to look at Goldman Sachs? You bet I need to look at Goldman Sachs. Goldman Sachs is up 2.5 at 244.20. It's still lagging a lot. But some of the others, like Bank of America, this is a nice move. It got back all the gains that it lost when it was up in the high 30s. We're going down to the 28s. And now on the 200-period moving average exactly, bounces back. So now I can answer Kevin's question. 3 things are happening. Oh, I got a call. I'm going to go to my caller. Reddy in Mount Vernon, New York. Reddy, how are you?
I'm good. Thank you, Basil. How are you?
I'm very well. You've got some good questions, I can see. Fire away.
So just frustrated, Basil. I've tried to. What I'll tell you a few of my trades beginning May. Going back to 2 weeks ago, I sold a few SPYs and QQQ calls, expecting the market might not, have much juice left going upwards. So I just sold a few calls, not too many, so I'm just frustrated. Where is this euphoria for this leg up in the market coming in from? And how I'm not looking at the other volumes. I wanted a general opinion from you as to, you're looking at the oil, the bond market, and things and so on.
Okay, we'll be right back. Ready? I'll be asking you a couple of questions as soon as we return. So we're looking at the Dow 225. We've got ready for Mount Vernon, New York. We'll be right back. Good questions, and we'll cover that when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and the Dow is up 227, S&P's up 25. Let's go back to Reddy. So, Reddy, let me just review. Did you say you bought calls that you still have on the QQQ?
No, Basil. I sold calls QQQ that I'm hoping to finally give up on them and might end up closing today.
Okay, so you sold calls. Okay. So, and do you remember at what price?
That was 171 calls, sold it at 50 cents or something. So they're at 150 now.
They're at 150.
Yeah.
So you sold them. You actually had a really good profit, and that profit is shrinking.
No, I'm losing money on them, but I'm happy. I'm fine with losing money. It's okay. It's part of the game. But I wanted to see what is the direction going forward next week and a couple more weeks.
So,
maybe till the end of May. That's the more.
So let me just do this. As it stands right now, the stochastic's at 93%. The last time the stochastic was in the 90s, it just hit about 90%, and that was right there on the 20th of April. Stochastic went to, did it hit 90? No, it went to 87%. Went to 87%, but it held there. There's a technique that I use that if the stochastic rallies above 80%, I love 80%. All the books will say to you, it's oversold. I'm sorry, it's overbought at 80%, which the implication meaning overbought means it should come back. I say, no, it's bought. This is exactly what you want. You want it to hold over 80%, and the longer it holds, the better. Haha. When within 3 to 5 sessions it goes above and then closes below it, with the price moving down, that's negative. Look what we've got here. We've got 93% in the stochastic. So unless NVIDIA does something really disappointing tomorrow, as long as the SMHs, the semiconductors, kind of hold okay, they can give back a point or so, but within another day or two, they've got to get back again to the positive side. And I think they are getting a little bit over, in this case, technically overbought just in my methodology. How we come out tomorrow. Now, I don't know if you actually want to wait a day to find out or not. What I am going to say to you is the breakout in the Qs right now at 169.38 above this trend line that you can see if you're looking at my charts with the second cup shape with higher lows and higher highs is suggesting to me two things. One is that the gap down high of the 19th of 169.22, well, that's been taken out, but we haven't closed on the day. But the fact that it's gotten into the gap, that island reversal gap, is actually a very good thing right now. So I'm going to say to you, one of the reasons why I personally said to subscribers that this is money management, we want to take a little profit off our semiconductor position, is because if there's a move up today in the spectrum of higher highs for 5 days in a row, that's unusual. This should have been some kind of a digestive day. The fact that we're rallying is telling me that we're beginning to get to the public's thing of missing out, and just about to throw up their hands and say, oh my God, I'm not shorting. This is crazy. This market is just going to keep going. We're right into that phase on a very short-term basis now. So I'm going to say to you, this is what I'm looking at. If I go to my 120-minute chart in the QQQs, it is somewhat extended. It's gone to a leg F. In the 120-minute chart, it is in an area where it should pull back and retest the high that was made on the 18th at that afternoon at 167. That's 2.5 points. It doesn't have to. I'm just saying that's kind of what I would normally anticipate. So I don't think we're quite done going to the upside just yet on the short term. So I think you can anticipate. Now, here's the thing. You see, and I wanted to mention this because I see that you had mentioned the SPYs and diamonds, etc. I'm going to say to you, my eye is on the IWM. It made a high, all-time high, of 160.30 on the 13th of March. What I've been saying is it's held better than any of the other indices, but it wasn't showing signs yet of breaking out. And now it's within an eye blink of going just another 24 cents, and it's gone to an all-time high. I just don't see how that should happen. And if it goes to a new all-time high, we might be looking at the next will be the Qs to try to follow, and then if it will make a new all-time high. But this is what happens. We saw that sequence. You remember the Dow, I can't remember when it was. The Dow made its high And then the I think it was last year, or maybe it was January, I don't know, time flies. And then the S&P suddenly made its high, or the S&P did, and the Dow followed, and then the Qs. So you got this domino effect. I'm just saying to you, I'd be a little careful, because the VIX index is actually only down 41 cents at 13.01, but it's still in the teens. If it starts to go to the 12s, I would say to you, we've still got a little bit more on the upside. So here I am. I'm going to say to you, this is a leg D in the daily chart of the IWM. It is a leg E. It's a leg E in the daily chart of the QQQs, except they are still way under the 175.21 all-time high, but have made a nice U-turn in the chart formation. And at this point, I'd even have to say to you, the 165s to 164s should be very good support for the Qs, and I'm looking at the potential for an arch formation to form, but it'll take a couple of days to do. So my parameters for you are very easy. If the Qs, by tomorrow this time, if you're looking at the Qs in the 170.70 or higher area, I think we're going to go higher into early next week. And if there's a very sharp pullback, and the Q is trading right now 169.36, actually at 168.50, we could stall. But I'm only going to call it a stalling formation. I think there's still too much skepticism out there about the rally. I'm seeing videos and stuff being posted about the huge crash to come, etc. I think so many people are nervous that that's giving a cushion of support to the downside. I think that's what you're looking for. I think the answer is there's a cushion at this point to the downside, unless NVIDIA is just so bad it drags the SMHs about 3 or 4 points lower by Friday to Monday. I think what's going to happen is that the worst case right now is some kind of consolidation. The best case is that we rally into Monday or Tuesday of next week.
Okay.
So I hope it gives you some perspective of what I'm looking at. And the other thing is, let's talk again Monday or Tuesday, and we can go through this again to see what happened on the weekly charts with Friday's close.
Sounds good, Basil. Thank you so much.
Thank you very much for calling, Reddy. I appreciate that. Folks, we got the Dow 236, S&Ps of 26. So now the question is with these H patterns. So that's a really good question. I wonder if I can do that. Oh, we've got a break coming up. Okay. There was one I was looking at. Oh, it's the S&P, ESMH. We'll be right back. We'll talk about the lowercase h that goes to an impact. Be right back. Basil Chapman, Tiger Technicians Hour, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I just realized I never really got to all the indices. So this is what I was looking at. You see this large H formation that's become a little smaller M right here, but we've broken to higher low is the E-mini. So 2552 was the low back beginning of April. Then just right at the beginning of May, we go to 2591. But we've just today made a higher high. So we're making higher highs and higher lows. That is the definition for me of at least a change, a short-term change of trend. This is a daily chart. So this says to me, I've got to look for the left side, 2744, and this candle right here, the ugly candle of the 19th of March, as the potential for a target to the upside. And that's what I want to say. I meant to mention that to Reddy. I just couldn't remember which chart it was. This is the chart I was looking at. And you see the stochastic came off a higher level and it's up nicely. The MACD also. Now, the MACD's got an M formation which says, in a certain sense, there's a limit to the upside before it turns down again. Then that says, well, that's about maybe 100, 150 Dow points, maybe 15 to 20 S&P points. Okay, let's get to the nitty-gritties. I want you to look at a quick one. I had a question on PAS, which is Pan American Silver. Huge move today. I don't know if it's earnings or if it's the actual silver contract, but it's up 11% at 18.19. Made a peak F top in the daily chart and pulls back from 1750s to just under 16, and that looked like an A and was just kind of hanging out. And then suddenly today you got this big move up, and that makes it leg C in the weekly chart. I had darn it, I had the monthly all done. This is a huge single leg. It's like a single leg A, but it's really a B in the monthly chart. And then it makes a pennant formation, a narrowing pennant from not expanding cone, but a pennant formation. And that just makes it real simple. I'm going to the candle highs that are most important to me, and I'm going to the candle lows. And that's just saying we're right at the resistance at 1820. If on Friday into Monday at this time, if PAS, trading at 18.20 right now, up $1.82, if it has moved to 1855 or even touched 19, that is a spectacular move. Now, silver is trading up. It's a little off the highs, but it's still up 20 cents at 16.74. My contention has been, this is really good, but my contention is I want to see silver up in the 17s, and then none of them are going to be impressed. I'm going to suggest that weekly chart is finally improving a lot, but it needs to do that. So let's see. I don't want to see it back at 16.50 in the next hour or next day or two. or under 1650, that'll be negative. Gold right now had a very nice gain. It is up 7 at 1320, but it hit 13, I believe it was 1322, 1323.4. Quick leg C, quick A to B to C, great leg C, because I haven't even got a crossover. Yep, the stochastic's gone to 23%. That's good, but the MACD hasn't crossed over yet. So this is okay, actually. It's not great. It's testing the 200-period moving average in the weekly chart. I want to see gold in the 1333 area. I'm going to be very impressed. Now, here we go. I had a question from someone, and I thought I did it earlier, but I didn't. In the den, I just can't place who it was, who wanted to know about GBTC. This is Bitcoin Investment Trust. I'm convinced that it's kind of stuck. All that talk about Bitcoin at 40,000, then 50, then 60,000. I think that Bitcoin is in a huge consolidation area. It needs time, and the big breakout is going to come out of the blue. But I got a feeling that the big breakout is going to come when other areas of the market are really starting to falter. So this will be the de facto go-to area. And I just don't see it right now. It's taken too long. I said before, it made a fabulous peak C, and then it pulled back too deep, and I was kind of stuck, and that's why I don't have it in my newsletter. I just don't want the risk. If I get a fantastic pullback that I see is absolutely the start of a much bigger move, I'll say, yes, we're buying it. I'm not worried about overnight. You got to be prepared to have a 8% or 12% stop on a thing like this, but it has the potential to go up 22%. That's different. I just don't see it right now, so that's what I wanted to mention. So I wanted to also look at, we did IWM, just about a breakout, at least to test all-time high. Here we go. So dollar. So the dollar it made a doji high in leg F yesterday, 93.42. Had just a vertical move straight up from the 80, 89, 30s, just straight up to 93.42. It needs a rest. The 200-period moving average in the weekly chart is right where it is now at 92.80. So that's going to be act like a magnet and a repellent at the same time. But the propellant of 92.24 in the daily chart, 200-period moving average, and the 200-period at 92, smooth, simple moving average, that could be support. I got a feeling it could, if it pulls back, could pull back a tad lower. I don't think it's going to break down. I know there's talk of this is just a pop-up in the dollar, and the dollar's going to go back to its bearish thing. Currencies don't move on a dime. The dollar doesn't move on a dime. All I can say is that I think that the dollar is making a move of significance, not just a short-term, but an intermediate-term move from the February low of 88.25, and that there could be a bit of a pullback, but if the dollar gets to the 94s, either in May or the first week of June, watch out. This dollar is going to have a big impact, and that goes to the next question I had, which was from Paul about the TNX, the 10-year yield. What happens if it goes to 3%? Well, let me just say to you that the TNX, I did a bit of a study on this the other day, the TNX is having a high-level consolidation. The weekly chart I've got as a peak E. I'm not calling it an A yet. I'm calling it as a peak E. If this takes out the high to make a leg D in the daily and a new leg in the weekly above 30.35, these yields are going to go quite a bit higher, and when the Fed talks about inflation, they're going to be shocked at the speed of inflation. That's what I'm thinking. That's what might scare the market, and that's the thing I'm a little nervous about. Next question I've got, let's go through these one at a time. XAL, surely it's about time for the XAL to have a bounce. Whoopee, it's up $1.41. It's pulled back sharply. It's at 106.97. I have to tell you, if the XAL can get to 109.35 in the next 2 weeks, 2 weeks, I'm giving a full 2 weeks. No, 2 weeks meaning, yep, giving it a full 2 weeks. I think then that we'll be looking at maybe crude oil finally having a little bit of a pullback. Crude oil right now, it's having a little bit of a pullback. It's down 22 cents at 17.93. It's just like the dollar. making a leg E with a doji type candle, hitting some resistance. MACD's good, stochastics at 81%, pulling back a little bit. Weekly chart's very good in leg D. All I can say is that crude oil looks like it's going to have a high-level consolidation if it pulls back. And it's, yes, okay, I'll talk about that when we get back. I've got it. My eye says that there are particular notations that are very important. I'll be right back. I was up 230.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve coming up. Should be a wonderful show with Steve, wonderful show with Dave White, and of course, wonderful show with Tom O'Brien. And you've got the wonderful Andy Heck. Wow, what a session you've got for the afternoon. Okay, so a question about LB. Where was that? LB. Bob wants to LB Brands 31.23 on track for lowest close. Yeah, this is LB Brands. It makes a high just over 100 back in 2015, end of 2015, trading now 31 under the 200-period moving average in the monthly chart. Hey, this is really bad. This is pressure. I don't see how they're going to get back to the 36s. It's a 31. 36 is really a breakout to the upside. It's going to struggle. Hey, I wouldn't touch this. Next one, GT wants to know about Boeing. See where Boeing is today. Boeing is up 1.48, gone above that recent high. I'm still going to, my contention is Boeing is going to be stuck in a range right now, consolidating at 345. If it goes to 363, 361 to 363, I'm totally wrong. I just think it's going to be starting to pull back next week. It's just the way I'm looking at the chart. I don't have a position there. Next question is UTX. UTX is trading up 92 cents. So we're all long from the 1977 area. It's at 124.03. This is going to be very important. It's acting okay, but the monthly and weekly chart are not good. And Triple M, I mean, it better be up over $1. Yep, $1.81. Good. It's trying to repair the damage that was done. These big caps, some of them have got just slammed. I mean, this is 260 to 192. Wow, that is huge. Some of the 22%. This is bear market material for some of them. So there's a lot of repair work to be done. That's the reason why I don't think the Dow is going to make new highs yet. It's going to come back and do some testing. Come on, those H's are going to repeat. Oh my, is that the break? Oh, all I can say is have a wonderful day. I'll be back with Tom a little later on. And otherwise, I'll see you on Monday. I'm pretty sure I won't be able to do tomorrow's show. I'll be back on Monday. Check out my opening call. And yeah, hopefully you find it very profitable and beneficial. And what can I say? Have a great day. See you a little later on. I'll see you Monday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.